Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update for the week of May 15th. So now we're getting into the spring. What's happening with home prices as we get into the spring? Where are we headed? Well, look at this slide. The price momentum is rebounding. You can see basically through January through June, prices were going up and up and up. Then they started going down, and you can see from July through January, they were below, they had gone down. But now look at February and March, and we're seeing it in April too. Prices are now rebounding and going up. We basically lost about 20% of what we built up in 2022, by June 2022, but we probably picked up 10%, at least half of that. So the price drop overall has been very minimal. And say, where are home prices this spring? Look at basically FHA, FA, CoreLogic, Kehrig. They basically are all looking in the same type of thing, where prices were up the first 6 months of last year, then they went down for 5 months, but now the last couple of months they've been going up, and they're going to continue to go up because, like we talked about, supply and demand, there just is not enough supply out there to keep up with the demand. Look at the traffic, the steadily climbing of people actually going out there and looking at homes the last 12 months. You can see starting from last March, it's going down, 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 down. Look at January and February and March, up, 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 up. So the traffic of buyers out there is basically going up. We fully expect interest rates to continue going down. They've settled down a little bit, and with all the key indicators and going into a recession, like we talked about, when you go into a recession, they lower the interest rates to kind of soften the blow. And that's what we're going to start seeing. We're not going to see 3.5%. But you know, we've been at 6.5%, 7%. We'll probably see 5.5% interest rates the next couple months. And really what you have is that's kind of what's driving the market, because there's so much demand, and literally the interest rates going down is like pouring gasoline on a fire with the real estate market, because they'll lower the interest rates to spur the economy. The problem is the real estate market is already hot. So literally they're pouring that gasoline. Rather than putting it in the engine, they're pouring it on the fire. So look at showing traffic above pre-pandemic levels. You can see the pandemic years of basically the showing traffic, and you can see 2023, it's going up, 2021, 22, but compare it to 17, 18, 19, 20. So the showing traffic is far above where we were before the pandemic. So, and then strong job market provides a foundation for housing. See, that's the other thing we're dealing with, is we have a couple different things. The millennials are in the peak of their buying season, so we have a lot of demand there. And then we have the job market is going great. Matter of fact, you know, one of the things that they're having issues with, the Federal Reserve, is the fact that the unemployment rate is so low, they actually want to kick people out of their jobs, you know, and that's by going into the recession. People will cut back the labor force, which will raise the unemployment. That's what the Federal Reserve wants right now. They want to raise the unemployment, because when everyone's got money, they're spending the money. And that's basically what's driving up inflation. So by raising the interest rates and by raising the unemployment rate, that's what the Federal Reserve and the federal government's trying to do, is slow the inflation down. Look at the job market continues growing. Look at March 2023 compared to April. Up and up and up, the change in the thousands. So the job market is going nuts. And then look at the majority of the industries have expanded, going all the way down to government, leisure and hospitality, financial, utilities, all the way up. The only thing that they've gone down with a little bit is wholesale trade. So the labor market's on fire. And unfortunately, we would think that normally is a good thing, but in an inflationary type area, when there's more jobs and income is going up, then obviously it drives the inflation up. So look at the unemployment rate. It dropped to a 50-year low. Right now it's 3.4, a 50-year low. And obviously that's what the government's afraid of. Hourly wage has grown to $33 per hour. Look how it's just moved up from 2010 to 2023 average, and where it was in April. So not only are more people working, but they're making more money. And now we're going to sit there and see interest rates go down a little bit, and we still don't have the supply that we need, and you're going to see this market stay red hot. So let's look at the San Ramon market. Look at the active inventory. Well, we always knew that there's going to be more inventory as we get into the summer after the spring Easter break. We talked about that in previous videos, and you can see it here. Look at it, it's gone up and up and up in San Ramon. But look at the pending sales have also gone up. And you look in Danville, yes, inventory has gone up, pending sales have peeled back a little bit, but when you look at this is still a seller's market. There's still not enough inventory going up. So we're going to see what the absorption rate is. We knew more listings were going to come on the market. Now the key is the next few weeks is, you've heard me talk about it before, what's the absorption rate? How fast do these homes get purchased up? Blackhawk market has always stayed about the same. Alamo market, you can see the inventory has been going up. Pending sales have stayed steady, maybe going down just a little bit. So we're seeing the Danville and the Alamo market basically start to get a little bit more inventory, which is a good thing. We need more inventory. But then, like I said, when you look at Dublin and San Ramon, you're seeing the pending sales have continued to go up. So the Dublin and San Ramon, kind of the South Tri-Valley, is very hot because all the people coming from the South Bay and up from Fremont and San Jose and the Santa Clara Valley, they're landing in Dublin and San Ramon. Not as much in Danville and Alamo. So we're starting to see a little pickup in inventory in Danville and Alamo. Basically, San Ramon and Dublin is as hot as it's ever been. And you look at the numbers as far as the percentage, everything over 100%. As I always mention to you, I never really count Blackhawk and Alamo because sometimes we only have one sale that closes. So it's hard to get a consensus. So sometimes you'll see that dip below 100%. Doesn't really mean anything because it could just be based on one sale. But look at San Ramon, Danville, and Dublin over the last 3 weeks. Everything 102, 3, 4% over asking. Remember, we were at 115 to 20% a year ago, a year and a half ago, and now we went all the way down to 92%. 93, 94%. Now we're up over 100%. Most things are selling for more than asking, and it's all because of supply and demand. There's not enough supply to keep up with the demand. So what do? Well, first off, if you're not quite sure what to do, you give us a call. Joe Kehrig, 925-487-6838, or drop me an email, joe@kehrigteam.com, or visit our website to learn a little bit more about it, kehrigteam.com. Now, because we'll sit down with you and we'll map out a plan. Is it the right thing for you to sell? Maybe, maybe not. We won't know until we figure out what are your goals. You have to have a plan in place, because the reason there's not a lot of inventory on the market, because people are not putting their home on the market because they're handcuffed by their interest rate. They might have a 3% interest rate, and now if they sell and they go out and buy something, they're looking at 6%. You know, so it's not a situation now, and then they're not even sure they can get a home because there's not that much inventory. So that's the handcuffs that people have. That's why we're not seeing the inventory. That's why contractors are going nuts, because everyone now is just fixing up the home they have with keeping their low interest rate instead of buying something else. So you don't have anybody out there saying, oh, let's just make a move for the hell of it, you know, and go from 3% to 6%. No, you have to have a reason behind it. So we'll sit down with you and run through the numbers to decide, does this make sense for you? And if it doesn't make sense for you, we'll be the first ones to tell you. So give us a call. Can't wait to see you guys next week.